Hi traders, so structure, liquidity plus POI alone won't make you profit. Right now, my last video gained a lot of view, and I know many of you have gone to your chart, practicalize it, try taking trades. You took a couple of trades, you won some and you lost some. Still, you didn't see profit throughout last week. Now, in this very video, I'm going to give you a 5-step plan on how you should go about it, how you should go about with your risk management, how you should go about with your psychology that is going to help you become profitable with this strategy. I've given you the strategy. I'm not going to give you 5 things that's going to help you start seeing profit. Not just going to the chart, taking trade, winning some, losing some, and still ending the week, ending the month, still not making any profit. So let's not waste time. Let's jump right into the video. There are 5 things that's going to help you become good or start making profit with this strategy. Right? The very first thing right here is to learn to wait for your setup. I'm going to practicalize everything I'm going to teach you right in this very video. We're going to use the backtesting tool to backtest each of these. Most times you won't find your setup on the chart. Now it's not there for you to remain calm and wait for your setup to form. Many traders don't know about this. Once they go to their chart on Monday, London open. On Monday, London open, they want to take a trade. Now if they don't find their opportunity, they didn't find the clear setup, they didn't get all their confirmations complete, you still see them taking the trade. Why? Because they just want to take trade. Now nobody's gonna give you an award for taking more trades. It's not there for you to go over, settle down, only take high probability setup, only take a setup you know you trust fully well. Right? Now on Monday you might not find the setup. It's not there for you to relax. Don't take any trade on Monday until you get your confirmation complete. Your confirmation is this: know the structure of the market, have your liquidity, take your trade from an order block. If you don't see that on Monday, wait till the next day or wait till the end of the day and see if you will find it. Only take trade when you see your setup complete. That's the first thing. You want to learn to be patient. This is going to help you become good. We're going to practicalize on the chart. I'm going to show you where you lack patience, how you're going to keep losing when you lack patience. Now the second thing is for you to create a trading plan. I keep saying this over and over again, right? For the past 2 videos I did, right? From the past 2 videos I did, I talked on you creating a trading plan. The truth is this: if you don't have a trading plan for yourself, you won't become profitable. And that's the simple truth. Now, a trading plan is this. This is what a trading plan contains. First, a trading plan is going to tell you you are the one who's going to create the trading plan yourself. Now, this is what you are going to write down in your trading plan. Number of trades. Then the second thing, your strategy confirmation. What do you need to see before taking a trade with this very strategy? Do I need my break of trade before taking a trade? Or I just go to the chart, look out for my liquidity, then I take my trade? You want to get your strategy confirmation, write it down. Me personally, I use my break of structure, order block, liquidity, then I write those down. If I don't see those 3 things complete, I'm not going to take the trade. The trading plans can also contain your risk management, your risk per trade. Risk management is literally just your risk per trade. A trading plan can also be your risk management plan. Now, risk per trade is this: if you fund any amount, recently I found about $100 in my trading account, right? I guess it's on the other phone. I funded $100 right in my trading account. Now, on that very $100, my plan is to risk $10 per trade, which is about 10% of the account. That's a risk per trade. I won't go over, take a trade today, risk $10. The next day, I'm taking a trade risking $20 or risking $50. I won't do that. I want to stay consistent with what I pick as my risk per trade. And there are reasons that made me pick that $10. Right? Now, these are the 2 reasons. First, is $10 is what I'm comfortable losing on that small trading account. If I lose up to $20 on that small trading account, I might feel bad. I might try to revenge the trade. So $10 is what I'm comfortable losing. That's the first thing. Then if I'm risking $10, I'm going to need 10 stop loss. Meaning I'm going to need to lose 10 trades before blowing the account. I won't blow the account until I've lost up to 10 trades. Those are 2 things you want to consider before picking any amount you'll be risking per trade. Then with your risk per trade, you want to always make sure you are consistent with your risk. Stay consistent with your risk. The next thing for you to create a trading plan is now for you to go over your risk to reward ratio. If you are risking this amount, how much should you expect from each trade you are taking? If you are risking $100, how much do you expect? If you're risking $10,000 on a single trade, how much are you expected to make? Right? How much are you expecting from that very trade? Me, I do tell my students, always go for at least 1:3. For every single trade you are taking, target 1:3 as the lowest risk to reward ratio. Meaning, if you are risking $10,000 on a trade, you should make at least $10,000 from that very trade. Why is that? Because most times, if you take a trade and you risk $10,000, winning $30,000, right? You now confidently risk $10,000 on the next trade. Meaning that very take profit now is going to cover for 3 stop loss. You're going to need to lose 3 trades before you lose the profit you made. It's just as simple as that. That's the power of risk to reward ratio. Without a good risk to reward ratio, if you take a trade today, you win the trade, you risk $10,000, you made $10,000. The next day, if you risk $10,000, you're going to lose all the profits. We're going to practicalize everything live in the class, right? I'm just going to break everything down. Then under your trading plan, you want to also make sure you control yourself. Don't FOMO into trade, don't revenge trade. Those are your trading plan. Then the fifth and the last thing with your trading plan is for you to go over, pick and select just few currency pair. Don't trade multiple currency pair. You don't need to add up 10, 20 different currency pairs to your watch list. Just pick few and stick to those few currency pair. Stay consistent with those few currency pair. Me personally, I trade about 5 currency pair, and that's the highest currency pair I trade. Right, stick to them, and it's gonna help you. Now, that's the second thing that's gonna help you become good and become profitable with this very strategy. For you to create a trading plan and follow it. Now, the third thing that's gonna help you become good with this very strategy and start making profit is for you to learn to do top-down analysis. If you don't know what the higher time frame is saying, you won't be able to know what you are gonna do on a lower time frame. And that's what traders keep doing, and that's where traders keep making mistake every single time. If the higher time frame just got to a key support level, a key order block, a key demand level, what's gonna likely happen? The price is gonna buy. Now you didn't even check what the higher time frame has to say. You just went to your 1 hour, your 15 minutes time frame, and you want to take a sell. If you're taking a sell, you're gonna hit stop loss. Why? Because the price has just gotten to that higher time frame key demand level, and what's gonna happen? It's gonna likely buy. So you taking a sell, you're gonna hit stop loss. We're gonna practicalize everything, how I do my top down analysis. So you can easily see, if you don't know what those higher time frame is doing, you won't be able to actually make high probability setup. You won't be able to win more trades. Right now, the fourth thing that's gonna help you become good with this is for you to backtest and journal every single trade. Every single trade you are taking right there is important. You backtest it. You've practiced. By the end of the week, maybe on Saturday, go to your chart, check out all the trades you've taken, check out the strategy, check out what has happened previously on the market, and see for yourself where you are lacking, what you are doing wrongly, right? What you are doing wrong, so you can easily improve and correct yourself. Then you also journal your trade. For every single trade you take, you want to make sure you write it down. If it's ready to save the chart, save it right on your notepad, then write it down. Write down why you took that trade, how much you risk on that very trade, right? What confirmation did you see? Did you get all the confirmation complete? Some traders I can even put, is it an A+ setup or is it a low probability setup? You want to know, write them down so you can easily see. With this, many traders who you see bringing up this different strategy, you see a trader bringing up another strategy like the ICT, liquidity concept, all of these different strategies, they came from backtesting and journaling. Where nobody just woke up and then start saying this is an order block. It came from consistent backtesting, studying the chart. If you hit stop loss, take a look at what you did wrong, and you will know what you did wrong and improve. With that, you will become good with this strategy. Right now, the final thing and the fifth thing that's going to help you become good is for you to focus on this one strategy and master it. Many traders, they have learned this very strategy from my last video, though I didn't give everything complete, right? I think I gave so many things right in the video, but I didn't break it down in a systematic way, right? So that beginners are going to understand it and everything will be so clear, right? Now, with that very video, you can be good with the strategy. But if you want to master it, become better with the strategy, then I have a mentorship class which you can join. There's a link in the description for you to join. That's by the way. Now, don't go over, learn the strategy now, use it for 1 week, and then say, no, this strategy is not working. You start going over to another strategy. Learn this, focus on it, master it. Right? If you don't master a strategy, there is no way you're going to become profitable. And that's just the simple truth. But if you study the strategy, master the strategy, you will be good. right? So these are 5 things that's going to help you become good with this very strategy, and that's going to help you start making profit. Now let's practicalize everything with about $1,000 deposit, and let's use our bar replay to take trades. We're going to be taking it. Let's use gold. Gold is a pretty cool currency pair. Let's practicalize it on this gold market. I've removed all the drawings right here, so let's go to gold and let's use my bar replay. So I'm starting this from the 1st of May. This month is the May, so let me start from the 1st of May, which is this very day right here, right? Which is this very day right here. So let's use my bar replay. Now, you want to follow everything I've given you. See for yourself how you will become profitable with this. And how much did I fund? I'm gonna fund about $1,000 in my trading account a month, right? Funding $1,000 in my trading account. My plan is to risk $100 per trade, right? Which is about 10% of the account. And I give you reason that is gonna make you risk this amount, right? I give you reason, 2 reasons. For if I'm risking $100 now, I'm gonna need 10 stop loss before I blow my $1,000. Then if I'm risking $100 is what I'm comfortable losing. It's an amount I'm comfortable losing in the market already, so it's not a big deal for me. So those are the 2 things. If it's too much, you reduce this. Risk 5%, $50, or risk 1%, $10 is what you can comfortably take. It's a risk you can take. Now I'm going to be risking this amount on a single trade. Now I'm going to take the trade on a much lower time frame so it can be quick and faster. First thing, my top-down analysis. Once I go to the chart, since I want to scalp, I want to take it on the lower time frame, 10 minutes, 5 minutes, 15 minutes time frame. I want to start from a 4-hour time frame. On this 4-hour time frame, what I want to do is I want to mark out key levels, right? If I'm gonna just drop into the comment section if I should do a video on top-down analysis. Yeah, I've done it previously, but still drop it if you didn't watch it. Now, on this 4-hour time frame, what I do, I want to mark out key levels. Key level where the price is gonna come to, or once the price is there, where it's gonna react from. And what did I say? If we are selling and the price just go to a key demand level on a higher time frame, it's gonna buy. But if you keep selling, you are gonna hit stop loss. So on this 4-hour time frame, I want to mark out all possible reversal points, right? So I have this major high, which is an order block, and the price came broke past it. It's now a breakout block. Now the price has just gotten there, so there's a chance that the price will buy, right? Nobody tells me the price is gonna buy, but there's a chance that it's gonna buy. Then this was the level the price got to previously. It went up, coming back down, it just violated that very level. There's a chance that the price, if it retraces back up and gets here, it's gonna sell. So I want to take my trade on a lower time frame, right? So on this lower time frame, the price has just got to this very level. Until it gives me a change of character, that's when I'll look out for buys. But for now, I'm gonna take a sell from this very breakout block right here. There was this level where the price got to, went up, came back down, violated it without respecting it. It was an order block, the price violating it, now a breakout block, which is a level I'm taking a sell from. Stop loss above this very region. Targeting is low, 1:3 at least. So this is up to 1:3. Now, this is another thing I want to make sure you know and understand. Now, this very trade is giving me about 133 pip stop loss. Now, if I go over to my chart and I want to take this very sell, I just go to my chart, go to my MT5, and then open the trade with 1 lot size. If I open the trade with 1 lot size, automatically I'm risking $1,333 on this very trade. Automatically, if this trade hits my stop loss, I'll blow my account. Why? Because I was not able to calculate this lot size, the exact lot size I'm to use. So this is another thing you want to make sure you learn and know first. Right, on this very trade, I'm risking 133 pips, meaning if I'm going to take this very trade now, if I use 0.1 lot size, which is about $1 per pip, $1 times 133 now, that's about $133 risk. It's still more than what I plan on risking. So I can reduce it to, let's say, 0.8. 0.8 lot size now is about $0.8 times the 133 pips, which is about $106. I can use 0.8 lot size. Right, I can use 0.08 lot size to take this very trade, and I will be risking $106 on this very trade. But if you don't know that, you see yourself using 1 lot size, and before you know, your account is gone. If you don't understand what I said, you don't have an idea of what I just explained, go over, watch video on YouTube on risk management, on how to calculate your lot size and pips. Then if you want to join my mentorship class, I also teach all of this right there. Now let's take this very first sell. I'm anticipating to sell from this very region, and the price has just got to this very daily level and this very 4-hour key level. Nobody tells me it's gonna buy, so I'm just waiting if it's gonna likely buy. And for it to buy, you need to give me a change of character. So I want to see what's gonna happen right here. This is the first trade I'm taking. All right, so the price keeps going down, keep breaking structure to the downside. So I'm gonna keep looking out for opportunity to take sell. Right, I'm gonna keep looking out for opportunity to sell since this market is in a downtrend. And in this case now we have this low, which is a low right here, and the price broke past it. Breaking past it now, that's a break of structure to the downside, and this is a nice order block right here. And this order block does not have any clear liquidity because this liquidity has already tapped on it. So this is gonna be a C setup, right? You know, we have an A setup, B setup. This is gonna be a C setup right here, which is a pretty somehow low probability setup. Sometimes they will go over risk less than what they plan on risking per trade. If my plan is to risk $100 on a trade, on this very trade I might say let me risk $50 because it's not a high probability setup, because the liquidity is not a clear and nice liquidity, but it's somehow good, right? It's a perfect trade. So let's see what's gonna happen. Now immediately the price came down, it created this other high, which is a first pullback after break of structure, which is a pretty nice area of liquidity, right? Which is a nice area of liquidity, but let's see what's gonna happen. All right, now take a look at what's happening right here. Now, where did the price sold off from? This very order block right here. I didn't see this earlier. There's this very nice order block right here at this very low. So this was gonna be my first trade. Stop loss above it, and if you notice, using this first pullback, this is a confirmation and everything is complete right here. The price at this low went up, came down, broke past it. This is the first time it's pulling back, which is an example of liquidity. It came back, validated that first pullback, using it as liquidity and tapping on this very order block, and you see what happened. It sold off. Selling off now, giving me 1:3 risk to reward ratio. Now I've made a couple of dollars. My account was at $1,000. I've made $300 because I risked $100 to make $300. If I take this very trade now, my account will now be at $1,300. Right, now let's take more trades. Let's look out for more opportunity. This market is still in a downtrend until it gives a change of character. That's when it's gonna confirm to me that it's in an uptrend. So there's an order block right here, which is this weak rejection, which can act as an order block. So I'm gonna see what's gonna happen, if it's gonna create any liquidity. Now the price didn't create any break of structure to the downside. It didn't break this very low, so there's no clear break of structure, meaning this order block is not valid. So I'm gonna remove it. The price didn't break structure to the downside, and let's see what's gonna happen. Now I'm now patient. I didn't go over, see the price didn't break structure, it's gonna buy. I start jumping on buy. If you do that, you are now being impatient and you're not just gambling. So you want to stay patient and wait for your setup to form. So I'm gonna wait till the price gives me a setup. Now the price has just broken past this very high. If it takes out this very major high right here, that's the change of character to the upside, meaning it's not gonna likely start buying. It was selling, change of character is not gonna likely happen. So let's see what's gonna happen right here. The price has just broken past that very high, meaning change of character to the upside has now officially happened. So now this is a breaker block, which is a level I can easily take a buy from. But for this breaker block to be valid, it needs liquidity. So if it does not have liquidity, I'm not gonna take it. So let's see if it's gonna create any liquidity for itself. Alright, so it created a liquidity for itself with this very low, but if you notice, this was a missed entry. I'm gonna try taking it from here, stop loss below it, targeting my 1:3 risk to reward ratio. If you notice, it came, at least that's your lowest target, at least 1:3. It came close, but didn't trigger. It was a missed entry. Maybe you missed this very trade, which is normal in the market. I'm gonna keep waiting, looking out for more opportunity to take trade. It hit full TP without collecting your order. Now there's a chance that the price can come back. Since this low didn't tap on the breaker block, it can use this very low as a liquidity to tap on the breaker block, but there's a chance that it won't happen. So We don't know what's going to always happen in the market, so we just wait and see what is going to happen right here. If it happens, I'm going to take the buy again from here, risking my normal $100. I'm not going to risk $150. I'm not going to risk $200 on this trade. I'm going to risk my normal $100 on this very trade. If you see what happened right here, take a look at this. The price, take out this very low as a liquidity, because this low now does not have it was a low protecting this very broker block. Taking it out as liquidity, it gave me 1:3 risk to reward ratio. Some trade can give you more risk to reward ratio. This trade hit TP, which is the second trade. If I take this trade, target 1:3, risking $100 now, my account will now be at $1,600. Taking 2 trades, winning 2 trades. Now I can see, take profit should be at this extreme high. I can say this is my full TP. There's my point. I'm going to take my profit. If I target there, it's going to give me 1:4 risk to reward ratio. So let's see if it's going to hit. Right, it didn't hit 1:4, but it gives me 1:3. My account now is at $1,600. Right, I'm targeting my 1:3. Now market is now forming some sort of range. There's no clear bias, no clear direction. So I'm going to just wait to see what's going to happen and give me my opportunity before I take my trade. Right, this market is still very much bullish. I'm going to keep looking out for opportunity to buy. So there's an order block right here, which is this last black candle, which is the level I'm going to potentially buy from. Right, but let's confirm and let's get all our confirmations complete. With this now, if you notice, I'm not taking all moves. You won't catch all moves. If you don't want to catch all moves, you just keep hitting stop loss back to back. Only trade your confirmation, trade them once it's complete, then you take your trade. Now, my target is this extreme high, which is giving me 1:5 risk to reward ratio. A pretty good risk to reward ratio, risking my normal $100, and I'm expecting $500 on this very trade. If you notice, it didn't come back to collect the order, just hit TP. So it was a missed trade. I missed this. If I want to keep waiting, I'm going to wait for it to retrace. But if I can't wait, I'm just going to delete the limit order and then look for another opportunity to buy or sell this very market. Market is still very much bullish. You can notice, if you notice, it's going higher. It's going higher, right? It's bullish. I'm going to keep looking out for how I'm going to buy, right? It's not bearish. If you notice, I'm not taking any sell. This first sell I took right here. Then after changing character, I didn't look out for sell again. I didn't gamble on selling. I know if it breaks past this very order block, it's gonna sell. But I didn't take it. Why? Because the low probability setup. It's because you are not patient to wait for your actual confirmation, actual setup to form. That's when you start jumping on this type of sales. Right? So I'm waiting till the price give me my clear opportunity. So I'm gonna be looking out for how to buy. There's no clear opportunity right here. I know this price can likely sell from this very level. Some traders are gonna say, "Oh, this is a doggy candle, this is a hammer, this is all of this," and they'll start thinking the price is gonna start selling. Nobody tells you it's gonna sell, and most times the price does not work on those patterns. Right? The price most times does not work on those different patterns. Those are just your illusion, right? Now, if you try selling now, you get stopped out because you can't wait for your setup to form. You are not patient to wait for your setup. Now, it's breaking structure. This is an order block that led to the break of structure. This was the order block that led to this break of structure. So that's the level I can buy from. So let's see if the price is going to retrace. And this is not complete yet because it does not have any clear liquidity for me yet. So I'm going to wait for it to give me liquidity before I take the trade from that very level. It didn't trigger me in. It kept going higher and higher. Nobody tells you your order will get triggered, so I'm gonna just keep waiting. If you notice, we've missed some trades. We've missed this one. We've missed this other one. Now I can wait using this as my liquidity. I can wait for the price to come back, so I'll take my trade from this very order block, same place. But if I can't wait, I'm gonna just look out for where I'm gonna buy again at the top, right? Waiting for the price to keep giving me my opportunity, taking my trade, and it keeps going. Right, this is a high. I expect the price to break it as a break of structure to the upside. So it has happened. The price just broken this high to the upside. And where am I gonna take the trade from? This very order block. The potential level I'm gonna buy from. And the price did not come back to the order block, and it keeps retracing. Now, if you notice, all of these now keep missing entry. I didn't jump on the buy. I knew it was gonna buy, but I didn't jump on the buy. I didn't go over, start gambling, jumping on the buy, thinking because I see it's gonna buy, then I start buying. Right? It's gonna buy, but nobody tells you it will actually buy. So you want to always trade what the market gives you. Now this is a level I marked out previously as a level I can buy from. So let's try taking a buy. Let's see, targeting my 1-3 as my TP. If I can hold, I'm going to hold till this extreme high as my full TP. But let's see, this one is a low probability setup. Why? Because the liquidity is pretty far off, right? It's far off from the OB, and also the sell-off is also huge. So let's see what's going to happen. All right, this was not a missed entry. If you notice, it came with a few pips. It missed the entry. Was going to give us 1-3, but it's missed. It's normal in the market. After waiting, you still missed entry. So let's see what's going to happen next. Hitting TP without collecting the order. Now it's still very much bullish. I'm going to look out for different points or different zones to buy this very market, but there's no clear opportunity yet. So I'm going to wait till the price gives me an opportunity. Right, so let's see what's going to happen. It's now bearish, forming some break of structure to the downside. That is very low, it's broke past it, a break of structure to the downside. Right, you are seeing it clearly. And where am I going to potentially take myself from this very order block? This market is now bearish. It has breaking structure. This is a break of structure to the downside. The break to the downside is now likely in a downtrend. So I'm going to look out for different zones to sell. So if I'm selling from here, stop loss above this very level. I can see this is my target, 1-3, right, as my full TP. So let's see what's going to happen. Right, this did not hold. You got stopped out. You just lost a trade. Right, your account was at $1,600. Now you lost one trade and your account is now back to $1,500. But most traders don't know this. You see them once they lose this single trade, you see then their account is now back to $1,000. If possible, they have blown their accounts. Right? You want to stay consistent with your risk. Now I got stopped out on this very trade. This is now a breakout block, a potential level the price can buy from. But I won't take my buy from this very breakout block. Why? Because there's no opportunity, there's no clear opportunity that the price is going to buy, and it didn't create any liquidity for me. So I'm going to just relax and look out for what I will be doing. So let's see what the price is going to do right here. If I had taken this buy from this breakout block, I'll get stopped out. I didn't get all my confirmation complete, so I should not be taking the trade. If you notice, you would have taken it if you were not strong and if you didn't watch this very video. Now the price has just broken structure to the downside. My bias was correct, it's bearish, so I'm going to be looking out for sales. Just that I sold from the wrong level and the price went up. It came to this previous order block, which is now a breakout block. That was where the price got to and sold off. So I didn't saw it right there. So this is a nice break of trust to the downside, and this is a previous order block that has a break of trust to the upside. Now the price can violate it. Right now a breakout block, so it's a potential level the price can now sell from. The price just violated the level for us. Now let's see. Right now the price is coming back there. Using this high, this is an internal, this is a little pullback on a lower time frame. As my liquidity, I can take myself from here, stop loss above it, targeting this low. Right, stop loss at the above it, targeting is very low. Number 1 is to 4 risk to reward ratio. Let's see what's going to happen right here. Alright, our trade has been triggered in, and let's see what's going to happen. Beautiful. Hitting full TP, giving us about 1:4 risk to reward ratio. Now if you watch this closely, 1:4 now, my account now is at $2,000. Right, my account now is at $2,000, and I've made a couple of profit on this account. I funded $1,000. Now I've doubled that account. I didn't gamble, I didn't flip the account, I didn't over risk the account. I was just consistent with my risk, and now my account is at $2,000. If I continue with that, if you notice, the market is now bearish. This is a nice level, a nice order block, which the price just violates, now a breaker block. I can take my sell from here. It's now bearish. All I'm doing is selling. Stop loss above this point, targeting maybe any level I'm going to target, right? But at least 1:3. I can target any level, but at least 1:3. But if it's more than 1:3, 1:5, 1:6, good and fine. Now I'm targeting this very level, so let's see what's going to happen right here. Let's see. I'm now patient. I know the price is going to buy till it gets here. It does not mean I'm going to have to take the buy. Allow the buy to work. Don't gamble. Don't go over first trade. Don't go over chase all the move. You won't catch all moves. So relax and wait for your setup or the markets to come to your setup. Right. Let's see what's going to happen. The price just came, violated this missed entry. I can keep waiting if I can wait. I can keep waiting, still waiting for this my order to trigger, or I can look out for more opportunity to sell. So the trading trigger, it just went down. Let's see what's gonna happen. Okay, it got triggered in. It got triggered in, boom, nice. It was a nice trade. It got triggered in, and if you notice what happened right here, it hit TP, 1:3 risk to reward ratio. It came close to your stop loss, but it didn't hit stop loss. 1:3 risk to reward ratio. Your account now is at $2,300. Now, what I always tell my students is this: once you have tripled your account, you funded $1,000, your account now is at $2,000. No, at $3,000. Once you have tripled it, it's at $3,000, $4,000. You can now say, let me increase my risk. I was risking $100 before. Let me increase it to $200, right? Or let me increase it to $400, depending on the risk you can take and how long your account is gonna last. So with me practicalizing this with you guys now, you can see how you can do this every single time. Market is still very much bearish. I can keep looking out for sell opportunity. Now there's no clear opportunity right here because there's no clear breaker block, which is a point I can sell from. So I'm gonna just wait for the price to give me an opportunity. So let's see. It didn't give me any clear breaker block. It just keep dropping. I'm gonna keep waiting for it to give me my opportunity so I can keep taking my sell. It's still very much bearish. I keep looking out for opportunity to sell this very market. Just as simple as that. If you notice, this very market started selling from this order block right here, using this very high as a liquidity. If you would have taken this sell from this order block, you get stopped out. Why? Because there's no liquidity protecting this very order block. So with this, you should be profitable with this strategy, right? With what I've given you, you should be profitable. You should start making profit with this strategy. Nobody's gonna teach you the way I teach you. Everybody's gonna just talk about the strategy. Nobody cares if you are making money or not, right? But I've given you a guide, shown you live practical example. I took some trade, got stopped out, right? You're gonna take trade, you're gonna hit stop loss. You can't avoid the losses, but you can minimize it. Right? You can reduce the losses you take in a trade, in a day, or from the market. So if this video was helpful, don't forget, like the video, and if you're interested in me teaching you in my mentorship class, just click on the link in the description to join the mentorship class. It's about $40 for 1 month. $40 in Naira is about 40,000 Naira for 1 month mentorship class. And for 3 months, just click on the link and you'll be added. You make payments and you'll be added to the group. So I'll see you all in the next video. So take care, guys.